All right, welcome everybody to this session of Goodegg Live. This is her 5-year investment, how it led to a lifetime of wealth. I'm really excited to dive into this because we often think that investing takes 30 years of diligent work, diligently contributing to our investments over time, when really, if we look at the numbers and we see the power of investing early on, you can actually free up a lot of your investing capital and even stop investing after as short as 5 years time span. So today we're really going to look at the power of investing for a good steady 5 years and what that can do to your wealth journey into the future. We're also then going to take a look at what happens inside that 5-year window inside a real estate syndication. So today I'm going to model out, I'm going to show you what it looks like to invest in an example real estate syndication. This is the kind of stuff that Goodegg Investments does. This is where I've pivoted all of my investing, my real estate investing to be passively in these group investments. And so I'm really going to flush that out all the way and see what that looks like. But we're also going to look, like I said, at what's going on in that 5-year time frame within these syndications. So to get us started today, we're ready to invest, right? So we all hit this point where we're like, yes, we've understand the value of investing for our retirement, for passive income, for our future, whatever it is, we're ready to invest. And maybe that means that we're thinking that, yes, I can put in $50,000 a year. Now, I know that turns a lot of people away initially. $50,000 is a lot, but there's a lot of ways that you can get there in terms of earning more, creating extra side hustle income to get to the point where you're able to invest $50,000 a year. And I understand that might take a few years to get to it. That's what it did for me. Initially, I was investing $10,000 a year and then $15,000 a year. And I got to this $50,000 a year mark. But we're going to use this as a great number to be able to say, if you can commit to sustainably investing $50,000 a year for only 5 years, think about it in that time frame too, just 5 years. And after that, you don't have to invest anymore at all. This is what we're going to look at, the power of this type of investment today. Now, for instance, this might be because you're an engineer and you're able to, like I was back in the day before I joined the Goodegg Investments team. I'm doing some survey work on a remote river up in northern Washington here, and I was able to live really simply, live really frugally so that I could put more money into my investing bucket. And I did that knowing that I may not want to do that forever, right? But I was able to put a lot of that income over into my investing bucket because I was in a profession that allowed me to do that. But it wasn't sustainable for me. And that's why I've kind of pivoted to do real estate investing more full time. But it's possible. And it's possible in a lot of different professions. So, what we're going to look at is passive real estate investing. I think that this is an incredible vehicle because it does free us up to optimize our earning potential, which is a huge lever in building our wealth. If we can earn more and invest the difference, we're going to be able to grow our wealth a lot faster and reach those passive income thresholds that give us back our time, right? This is the big thing why we're here. We want control of our own time. We want passive investing. We want passive income so that we can do what we want with our time. So we're going to look at investments that have an equity multiple of 1.8x. You're going to see that this is about the average of what we try to underwrite to. It's a fairly conservative estimate. We've at Goodegg, we've gotten better returns for our investors, but this is a great one to start with. We're going to look at 8% cash flow and a 5-year hold time. Okay, so this is what all of my numbers are based on, this type of standard model. Now, we at Goodegg, we are not financial advisors. We are not legal advisors, and we're not a tax advisory firm. So please take all of this information as just education, just information for you to be able to move forward a little bit more sort of open-eyed into your investing journey about what might be a long-term investing strategy for you. Okay, so make sure you consult with those advisors, get them on your team. You're going to have a much, much stronger wealth building journey if you can have professionals like that on your team. Okay, so this is what it looks like within those first 5 years, right? You're putting in that $50,000 of capital every year. You're seeing a little bit of cash flow, but you're reinvesting that cash flow. Okay, so we're not pulling any of the income back out every year. So in year two, I'm investing $50,000 and about $3,000, so about $53,000. In year four, I'm investing a little bit more, a little bit more. And we just really keep up the effort. This is those time years where you might be living simply. You might be renting out a room in your house. You might be, for instance, my family and I rented our whole house out on Airbnb for 2 months during the summer and lived with grandparents, right, in their ADU in order to get a little bit more income to be able to put it into our investments. This is what that time frame looks like, right? So, how does that look as far as how much you've been able to invest? Over those 5 years, you've been able to invest $250,000. That's a huge amount, right? In just a short 5 year span. Now, remember, that is all that is coming out of your pocket in this entire scenario is $250,000 over 5 years. You've also been able to invest an extra $38,000, which was the cash flow that you've received during that time frame of those investments. So a total invested of $288,000 in the first 5 years. Then let's say maybe you even thought, oh, I'm going to keep this up. I'm going to keep going. But life happens. For instance, you have a baby like we did, right? And you get all new priorities in your life. This is just one example. Maybe you also get a fantastic job opportunity to work for a nonprofit and you need to take a pay cut to do that. Or you decide to take care of an aging parent, right? There's a lot of reasons why life can change your trajectory. For instance, we're just going to go here. Like maybe you want to spend more time with your kids at home when they're really young. So you want one of the parents in the family to be part-time. Maybe that means you can't contribute $50,000 a year anymore. So back to our scenario, this is the 10-year window, right? You're no longer contributing that massive $50,000, but you're reinvesting all of the cash flow and all of the sale proceeds now. So because we have a 5 year hold, in year 6, we've actually sold an asset, and that has produced an earning, a return right here in this light blue bar. So our total investments are growing, except at a sort of shorter rate over time. So during that time period, right, you watch your family grow. It's great. You're able to work part-time, maybe not invest that extra $50,000. Rather, maybe stop earning that amount to be able to do what you want or other things. But okay, so first, let's look at what's that done for the total amount that you've been able to invest. So no more of your own money, but you've invested $129,000 of cash flow and $86,000 of sale profits. So the total amount you've now invested in 10 years is $500,000. And that's none of your new capital. That's an incredibly awesome lever to build your wealth over time. And 10 years really isn't that much amount of time, especially when you're thinking in terms of kids, which I do because I'm in the thick of those young years right now, and they're growing really quickly. Okay, so you find after 5 years or 10 years that life just doesn't stop. Actually, there's all kinds of things that you want to keep doing with your time. For instance, now I'm finding, well, I actually need passive income to pay for my kids' school and daycare, and there's other things that I want to do. So let's look at a scenario now where you're using the cash flow proceeds as passive income. So rather than reinvesting those, you've stopped and you're only reinvesting the principal amount every year. So you still are continuing to grow, to generate passive income with your portfolio, but now you're able to pull income off. In year 6, that's going to look like $61,000 of income. We're talking 11 years, right? With just 5 years of concentrated investing. You might think of those as your hustle years. Think of them as really just like growing your future with just that amount of time. Within almost 10 years, on the 11th year, you're going to be able to pull $61,000, right? That's more than you were investing in the beginning. This is incredible. And that amount alone just kind of blew me away. By year 15, you're pulling $70,000. Now, the thing to note with this is because you're only reinvesting that principal, it's the same amount you're investing every year. So we can basically consider this to continue more or less into the future, $61,000 to $70,000 of income, right? That's not a bad deal, except I know that most investors are looking to grow it a little bit more, especially as they reach retirement age. So let's look at another scenario. Let's play a little bit with these numbers because that's the fun part of real estate investing. You might also find that you've freed up some extra capital at this point and you want to put that back in. But let's just say that we're only using the cash flow as passive income, right? And we're going to reinvest all the proceeds of our investments. we're going to see now that this is going to continue to increase the amount of income. So the income that we're pulling off is still quite hefty, right? In year 11, it's only 37,000. It's not that 60,000 because we're reinvesting the proceeds. But by the time I reach year 20, it is almost $60,000. And we're moving in this upward direction. This is pretty cool. So I look at this and I'm like, okay, in year 11, $37,000, that's a fantastic amount to cover some new expenses that might have come up. Like I mentioned, private school that you might have found, or maybe it's a vacation, or maybe it's a down payment for your primary residence, something else that you're able to use that income for. And sometimes it's really fun to use the passive income from your investments and not just like lock it up for 30 years, because you can start to feel the power of that. I would actually highly encourage everyone to consider using a portion of all of their cash flow to be able to just put it back into their lives so that you can start feeling what it feels like to have passive income in your life. This is a big needle mover, and it actually might inspire you to invest a little bit more and move towards your financial goals a little bit quicker. So if we draw this out even more, those simply the cash flow amounts we're talking about, right? And this again is averaging over time. Different syndications do different amounts, like our hotel deals are kicking out even higher cash flow than this, right? The 10%. Your sale proceeds might go down a little bit to even those out for that 1.8x equity multiple. Typical value add multifamily investments might be a little bit lighter in the early years with cash flow due to those value adds, due to reinvesting in that property to force appreciation. Right. So these are all averages, right? This is just a model spreadsheet here, but we're moving in that direction of even replacing 100K salary by year 30. Now, at any point in here, you could pull some of those sale proceeds too, right? To be able to live off of those, which is pretty fantastic. And really, like, the point of this whole thing is to think about those 5 years. That is really where you did the bulk of this work, right? I think that this is really powerful, because I know that what kept me from investing, I didn't invest for almost all of my 20s. Like, I look back and I'm really kind of ashamed of that, but it's true. And I was doing other things that really built up my life experiences that I would never trade in. But if I think about it, like, had I just like hustled and invested for 2 years, for 3 years, for 5 years at the most I could, right? I would have put myself off way, way, way better position that I am today, or maybe that I would have been. I certainly have made up for lost time, which is really a story too that everyone needs to remember. But if we can think about it this way and not be daunted with like, wow, I'm going to have to do this for 30 years in order to reach any kind of payoff, right? So this is a pretty powerful way to think about those 5 years, and to really think about, like, if I can just do this for 5 years, I can build a lifetime of wealth, right? I can really set myself up to have a lot of time freedom as I go down, because that's a good amount of passive income that's coming off our investments pretty soon in that journey. So within those 5-year cycles, right? This is why the 5-year window is so an important one for all of us to kind of chunk out our long-term goals into these 5-year windows. This is why we discourage people from looking at an investment and seeing like, well, my first 2 distributions were quite low. Well, certainly talk to us about that so that we can help educate you as far as what's going on behind the scenes. But typically, like, for in multifamily, the renovations might be happening, right? We might be putting money back into that property to increase the value of each rental unit, each apartment, so that we can increase the rental rates and make more of that net operating income, so that we're forcing appreciation in the property. Other things we're doing in the back end in that 5 years is we're increasing other forms of income. Again, we can bring those rents up to market rent. I can increase their quality so that they're getting higher demand from other rental units in the region, in the area. We can also add other streams of income like laundry facilities or parking. We're also optimizing expenses as we go. Our asset manager, Stephen, is like a hawk on these properties in terms of managing the property managers, managing contractors. Basically, all of these operational efficiencies we're able to dial into them, and so that we're increasing that net operating income by reducing expenses. And again, over this 5 years, this is we like to think about this as a great time frame for really seeing healthy appreciation in growing markets. And that's why we really target these growing markets in the Sun Belt and the Midwest, to be able to show that, like, if in 5 year span, most of these markets are going to grow appreciably, right? Maybe in a 2-year span, a 3-year span, they might as well. We might choose to sell early if the market says that. We might also choose to sell in 7 years if we're not seeing that type of growth, right? But appreciation in this time window is more likely to happen. Now, in our hotels, it's a little bit different here. Because we're getting more of that cash flow as we go, right? In our distributions, in terms of that overall rate, the overall return, that 1.8x equity multiple, we're getting that sooner throughout the life. And the back end is a little bit smaller because of that, typically speaking, right? So this happens because during that process, we might have acquired a brand new hotel. So this is post-construction acquisition. That means that we're going to be fully stabilizing that business plan. We're increasing the occupancy. We're basically like tweaking everything so that it's operating like a new asset should operate. We might also choose to renew the franchise, and this basically just makes the value of that property increase quite a bit more for the next seller. Also, similar with any business plan in real estate, you're optimizing those expenses through reducing things, right? Corporate expenses, bloated payrolls, unnecessary contract services, all of these things. So really fine tuning in that. And then maybe some strategic improvements as well. There might be some renovations that we can do to increase those average daily rates. That's what we use for basically the rental income of hotels. It's that daily rate so that we can move those. Even small amounts in this can make a big difference because it's on the daily scale. So those are some of the things that are happening like within that time, that 5-year cycle, right? And I hope that everyone can see sort of like mapping out their long-term investing goals by chunking it up into these 5-year cycles. For me, my daughter just turned 7, which is really helpful for me to say, like, okay, I've kind of just gone through one 5-year cycle. What's happened during that time period? And now, if I continue that out, what could happen in the next 5-year cycle, in the next 10-year cycle? And even though I'm purchasing investments throughout that time frame, it just like helps me, instead of thinking about things in this 30-year time span, which just isn't like not motivating to take big action or have consistent small daily actions that contribute to those accounts. But if I can see it in this 5-year window, it's much more helpful for me, at least. So Goodegg Investments, if you're unfamiliar with us, we've been doing this for over 5 years. We've had many exits. So they've all exited. Most of them have exited in less than 5 years, just due to the market cycle. So that average hold time is actually 35 months, which is, if you do the calculations, that's almost 3 years instead of 5 years. And really, that's just the market cycle. But in that, we've been able to deliver a pretty great equity multiple. That's that 2.8 in the lower left-hand corner. So it really, this all depends on the market cycle. But if you're using conservative numbers to kind of base your future kind of planning, your strategy around, you're hopefully going to always be pleasantly surprised. And right now, we do have offerings open that you can start investing. You can start getting your money deployed in this passive way. This is fantastic because you go through all the stuff in the beginning to be able to set yourself up, learn about this type of investing, learn how to pick the right investments, how to pick the right team by attending events like this, so you can get to know us. That's a big way to do that. But also how it's going to work for you, right? So to do that, we offer a couple of different investment offerings that are open right now. We have the Goodegg Preferred Equity Fund. Now, I talked a little bit about multifamily and hotels. Preferred equity is investing in multifamily, but you're kind of in a different place in the capital stack here, where you're actually getting paid first. So we have great, consistent monthly distributions, which is rare. Everything else is quarterly in this industry. You're going to get monthly distributions. We do have that same 5-year horizon, and this one is an accredited only investing opportunity, and there's a $50,000 minimum. But we also, this one is coming soon. We're about to launch the next one. It is based in one of our assets located in Orlando, Florida. Most of you may be familiar with that if you're a returning investor here. So look out for this in the next couple of days, in fact. We also have the Growth Fund 2, and Jason, I believe that this is still open for a couple more days, maybe another week. I know that we're almost right at the max there. This is in those select service hotels. Again, 5-year time period. And our growth funds are our non-accredited investment offerings. So this is where you can come in at a lower investment minimum, that $10,000 investment minimum, and you don't have to be an accredited investor. You can be an accredited investor. And these are investing in 2 very specific hotel assets that we've already acquired that are already cash flowing. So you're going to cash flow from day one with this opportunity.
Yeah,
Which is
it is still open, just to answer the question. So yes,
great.
but
Yeah.
for a very limited time. We have the final date as February 15th. That would be a date for not only getting your commitment in, but getting it funded. And then it's still on a first funded basis. So right now we're like right at the tail end. So there's a little bit of space, but not much. So if there's
Yeah.
interest, now's the time for sure.
Yeah. Yeah. And these are hotels that are going inside of our bigger hotel fund. This is for the accredited investors. So we'll acquire new hotels and nest them inside this hotel fund. And then we'll offer a new growth fund for our non-accredited investors or other folks who want to invest at a lower minimum amount. And those will be in those specific assets. So we're happy to go over that a little bit more. Just so everybody knows, every Tuesday, Jason and I are actually on kind of a casual popover, we call it, chat at 11 a.m. Pacific time every Tuesday. You can find that on our events calendar on our website. That's goodegginvesting.com/events. And that's a great time to just ask any questions you have. It's totally unstructured. We don't come with a presentation like you're seeing today. And we're able to answer any questions you have about this process, from getting to know us, from how this works, or higher level questions on specific assets, whatever it is that you want to talk about, or like how we drink our coffee, which we talk about that too. All right. So it's pretty easy once you understand the process here and you've picked an investment that you like. You commit, you verify your information, and you fund your investment. This is the beauty of passive real estate investments, that once you've done this initial work, you don't have to do anything, right? You can focus on your earning potential. You can focus on saving. You can focus on your family. You can focus on your passions. Whatever you want to do, you do not have to manage these assets. The experts do that. So that is why we are all here, really. All right, that's it for today. If anybody has any questions that they weren't able to ask in the Q&A, maybe you're in your car, feel free to email us at any time, investorrelations@goodegginvestments.com, or give us a call or a text. That's 888-830-1450. We will answer or get back to you within 24 hours. And really, we were founded on helping people understand this, right? We think that this is a breakthrough way for people to invest in real estate, to diversify their portfolios easily for anyone. And we're, especially now with our growth funds, we're really operating at offering this stuff to anybody, these opportunities to anybody. So we really want you to learn, and we're serious. Take us up on this. If you have any questions, reach out anytime. Jason, do you have anything to add before we call it a day here?
I've got nothing. You covered everything. So thanks for putting all that together. That was incredible.
Awesome. Awesome. It was pretty quick, but I hope people have a little bit of inspiration to make it work for them.
All right.
All right. Well,
Thanks,
thanks everybody
everybody.
for joining. We'll see you next time.
Bye-bye.